please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
So welcome in our next guest, Pankaj Pandey, Head of Retail Research at ICICI Direct, has joined in. And he has done some homework for us because he's got 3 stock ideas. Pankaj, good to have you on the show. I am going to start with the first one, Symphony. These stocks have anyway been excited because we are expecting the scorching summer to play out, and it is playing out like that. It's a discovered idea. Do you think there's more upside to Symphony?
Yes. So on Symphony, we have a target price of 2,110. I think reason why we continue to like this stock for long is that see this segment, if you look at air cooler as a segment, is expected to grow in double digits, about 17-18% for a good number of years. Within the segment, the unorganized pie is about 70%, and of the organized pie, this company holds about 50% market share. Now we are getting feelers that even from the management as well, that there's expectation of a shift from unorganized to organized segment, and I think that should keep their volume growth in double digits. And I think last quarter also we have seen good 20% kind of a growth overall in terms of volumes. I think this particular quarter, Q4, also we are expecting a similar kind of a growth. What we are also expecting is that the companies foray into new countries like China, I think should also help them achieve better numbers, though export is still not a big number for them. But overall, we are expecting good sort of growth in terms of volumes. Recent product launches have been quite good. So overall, we are expecting about 22% kind of a top line and bottom line growth. And we have a target price of 2,110 using TCF. So we continue to like this stock, and I think this is a good compounding story which will continue to play out for quite some time.
Right, Pankaj, so you said you spoke about China as an export market, but what stops the Chinese from, coming on here aggressively with their products? I mean, Symphony's got a brand, but the category itself is pretty commoditized, right?
Actually, if you look at historically, what has happened is that you had all metal-based coolers in India, and which is where the migrations sort of started to happen from that side to the plastic-based. And I think in a country like not even China, even this company has been doing well in other export markets as well, and they've been selling their products within their own brand name. So it's not that the white labeling is what they resort to. And in addition to that, I think Chinese is a big market which they have sort of entered. I think we are not really looking at big volumes. So domestically, volumes are at about 9.5 lakh. Overall export volumes is still very small at about 1.7, 1.8, which is the number expected for FY18. I think China also is a big market, so it's not that they have to make a big mark there to sort of grow. So even on a lower base, it is quite possible there that they can grow. I think industrial cooling segment is also an interesting piece which can also sort of help the company grow, though it is still a very small pie overall.
Okay. Pankaj, let's move to your next pick, Ratnamani Metals. And this is interesting. It's a play on more oil and gas exploration?
Actually not. So this company is a play on the entire oil and gas space. Besides that, power, whether it is thermal or nuclear, then you have fertilizer plants. So basically this company manufactures carbon steel tubes as well as stainless steel tubes, which are, say for example, used in heat exchangers and all that. So this company, if you look at, has got a capacity of about 3.5 lakh tons of carbon steel tubes, where they are operating at about 48% and the margin profile there is about 12%. It is, I think the stainless steel segment is where we are sort of quite excited about. Now here the company has got a capacity of about 28,000, and which is what they are looking to scale up by another 20,000 tons by the end of Q4 FY19. In this segment, if you look at the margin profile is far better at about 25%. And why we are excited is that overall capex scenario in the oil and gas space and the other associated space is looking very interesting. And this segment, stainless steel segment itself, contributes about 42% to their top line. So, so this segment is going to grow further with better margin profile. So overall, that should help the top line and bottom line. Now till 20, we will not see those getting reflected in numbers, but we expect that the prospects of this company is getting better, and the company is making all the right capex in the right direction. And largely this capex will be funded from internal accruals. So we like this company with a target price of about 1,100.
Mm-hmm. And you got one more idea, right? NRB bearings.
Yes, Prashant. So NRB has been sort of doing well. So this stock is up about 45-46 odd % in the last 12 months. Now FY18 has been a sort of a turnaround year for this company, and largely this company derives about 62% of its top line from the auto segment, largely two-wheelers. Then you have passenger vehicles and CVs. So basically they are a market leader in needle bearing segment. Now what we have seen in the last 3 quarters, especially from Q2 onwards, is that the company has been delivering good double-digit top-line growth. There has been a margin expansion, quite a good quantum of expansion in margins, so from about 12% to 19% in the last quarter. Now we expect this trend to sort of continue because the prospects for all these 3 user segments continue to remain very bright. And this stock is available at a reasonable valuation of about 16 odd times. Now we expect this company to sort of grow their top line by about 13-14 odd %. Bottom line growth could be higher at about 23 odd % because we expect the margins profile to be better at about 18 odd %. So with reasonable valuation and good growth, we expect that the stock will further run up to about 215 levels.
All right, Pankaj, thanks very much for joining in. We'll leave it on that note.